again, my friends. It is your loan guy, Troy, with the Reichert Mortgage team, having great day and really have some exciting news for you. I'm really excited to bring this to you. We have another down payment assistance program, a 0% purchase program for you here. And we're going to go over some of the ins and outs, who's eligible, how do you become eligible, what type of homes, those kind of things. But uh, again, we have the other down payment assistance programs as well. So don't think that this is just a one and done kind of thing at the Reichert Mortgage team. We have many different products out there to help a lot of folks who might need some assets in order to qualify, get you into that home. I know that interest rates are indeed a little higher than they have been in the past, but remember, this is so important. I wish I could just foot stomp this in every single video that I do. When interest rates are high, a lot of the buyers are indeed on the sidelines. If you can afford and feel comfortable with getting a home and buying a home, that is the quickest way to wealth. And when all those other people are on the sidelines, this is a perfect opportunity for you to take a look at this and make sure that you're buying here. And remember, when rates do come down, I'm not promising when, okay? I'm not one of those people who do a bait and switch on you, say, oh, don't worry, the rates are going to come down in 5 months and we'll refinance you. That may indeed be the case, but we can't promise that out there. But when they do come down, we'll be ready for you to go ahead and realize a lower monthly payment down the line. And now you're not fighting on purchasing later on in your future. You're not fighting all those other people who are waiting for those rates to come down and they're paying extra for that house. Because guess what? When more buyers are out there and looking, that is an advantage to sellers. They don't have to maybe pay those closing costs, or maybe they can indeed raise those purchase prices and those kind of things because supply and demand tells you that if it's a seller's market, right, things are going to go up as far as purchase prices are concerned. Let's take a look at the zero down purchase program. I'm really excited to bring it to you. So I'm going to pull this up here real quick and show you. This is a really simple process. Okay, we can provide up to, for 3% or up to $15,000 in assets for your down payment. This is in the form of a second lien. Your mortgage, your monthly payment on your mortgage is indeed your first lien on the property. Second lien, no monthly payment and no interest. So if indeed you got $15,000, that amount would stay $15,000, no interest accruing until you paid it off. Okay, that balance is indeed due when the first lien is refinanced or paid off, right? Or when the home is sold, that second lien would indeed become due. You can make payments if you wish on it while it's sitting out there, but you don't necessarily have to, okay? So really simple. A lot of times these other down payment assistance program, there's, it's interest on that, and as far as the payment process is basically the same. The balance is due, basically the same, but there is no payment on this zero down purchase program, and there is no interest collected. Now, this is a conventional loan, basically, okay, which is another great thing about this program, okay? So eligibility, there's two different ways to qualify. Let's go ahead and take a look at this. It's an either or thing. You don't need all of these to be true in order to qualify. The first way is if you are at or below 80% of the area median income for where the property is that you're looking for, okay? So again, like let's say in Colorado Springs, 80% of the area median income is $84,000 a year. Okay, so if the money on the application, as far as the income is concerned, is at 84,000 or below, then you would qualify for that. Now, there are ways to get an extra $2,500 credit. Check this out. If you're in at 50% AMI, area median income, right? If it's below that, you can actually get a $2,500 credit. Now, El Paso County, the chances of that happening are a little less, but in other areas of the country, indeed, this could be something where you get a little extra benefit for this program. Now, you have to have a 620 and above credit score on this. And now look at this as well. The loan to value has to be between 95 and 97%. What does that mean? Well, you have to put somewhere between 3 to 5% down on this. And again, you can't access any more than 15,000 in down payment assistance. Doesn't mean that you can't provide your own monies in addition to that up to $15,000. But as far as the amount of money that you're going to get from the program itself, 15K is the max on that, but it does have to meet the down payment requirement as far as only between 3 and 5%. Now that's one way to qualify. Or at least one of the individuals is a first-time home buyer. The definition of a first-time home buyer is if you have not had any ownership interest in a property in the last 3 years. Some people don't know that. Some people think, oh, I bought a house back in 2008. Well, as long as you haven't had any ownership interest to mean not on title and not on the loan on a particular property, then you are a first-time home buyer after 3 years of not having ownership interest, which is really, really important. Now, on this one, you have to have at least a 700 plus credit score. Same down payment amounts, 3 to 5% on this as well. Okay, so there's two different ways to qualify. If you're a first-time home buyer, you can have lower credit scores, but you have to meet the income requirement. Okay, I'm sorry, if you're not a first-time home buyer. If you are a first-time home buyer, you do not have to meet that area median income requirement, but you do have to have a higher credit score. So there's, again, two different ways to qualify. Now, types of properties on this that you can buy is a single family home, condo, townhome, no manufactured homes on this product, okay? Now it has to be a conventional 30-year fixed only. Can't do a 15-year, 20-year, anything like that. 30-year fixed. Remember, the audience for this particular program is folks who need help getting into a home. Well, if you can afford a 15-year mortgage, the chances are you wouldn't be really the target demographic for this particular product, okay? So that's the reason why it's a 30-year fixed loan only. Now, some of the benefits obviously are that you get into a home with less assets, right? Let's say you only have, gosh, 10 grand in your bank account that you have access to. You could use this program for the down payment portion, okay, and use that $10,000 for closing costs if you cannot negotiate the closing costs to be paid by the seller. So it gives you that flexibility from an asset standpoint. It also has amazing flexibility from a credit score standpoint. I'm going to show you something here in a minute. Comparable to regular conventional rates. Even though you have a 620 score potentially and you qualify for this program, the interest rate is comparable to a regular 30-year fixed conventional. So let's take a look at some of the numbers here. I'm going to blow this up a little bit, okay? The first one is with the 700 credit score, as you can see over here on the left-hand side. Now, I gave you an idea of now this is not, what I'm quoting any particular person out there, okay? The note rate right now on this particular program is 7.375. Okay. If indeed it stayed there forever, and never changed, not going to happen, but let's just say that. And we have an estimate in here at $175 each for property taxes and homeowners insurance. Now, because you're not putting 20% down on a conventional loan, you will have monthly mortgage insurance almost always on this, unless you decide to pay for it up front, but that would be kind of defeat the purpose of a down payment assistance program. Monthly mortgage insurance would be about $170 in the scenario of a $500,000 home using the full 15,000 and putting basically 3% down. 3% of 500,000 is 15,000. Okay, if this is kind of the top of the mark, right? Really, the max you can buy on a house if you're only using the down payment assistance program to cover the down payment is a $500,000 home. If you have additional monies, you might be able to buy something more if you need to, but that's really the cap as far as the maximum amount of down payment assistance monies this program will cover. So if you see this, then the estimated monthly payment on this $500,000 home would be about $3,870, we'll call it. Okay. Now each house is going to be slightly different out there, but I wanted to give you an idea of what that kind of looked like. Okay. So let's look down at the bottom one here. 620 credit score. Usually on conventional loans, you're getting double whammied on these things. If you have lower credit scores, you're going to have a higher interest rate, quite a bit higher because of your low credit score, and you're going to have a higher monthly mortgage insurance, okay? On this program, same interest rate, okay, as a 700 credit score. Again, they're incentivizing to try to help people get into homes here. Now, I will say the monthly mortgage insurance does indeed go up. It's $170 in the top scenario, it's about $445. Again, this is worst case scenario with a 620 credit score. It's different as you kind of look at different credit scores out there, but I kind of wanted to show you the top of the mark and the bottom of the mark as far as that's concerned. So you go from about a 3870 estimated monthly payment to about a 4145 on that particular program. But again, you're getting into a home with hardly any assets, maybe no assets if the seller is covering the closing costs, right? Um, the other down payment assistance programs are usually FHA loans, and they have higher interest rates than this, higher closing costs normally as well. The closing costs stay lower on these ones as well. Now there is an additional about $1,500 in closing costs, but the other down payment assistance programs that I see that I have access to, usually those closing costs and the amount of money to bring to closing is way more than that extra $1,500 is on this particular program. So you're going to save yourself money on this as well, and the monthly payments are lower. Now, if we're looking at a $300,000 house, obviously, the monthly payments are going to be less on this type of program. If you can indeed show that you're going to put 5% down, that's going to help out a lot because your interest rate gets a little bit better potentially, and your mortgage insurance definitely gets better. So I wanted to show you the general idea of what this looks like. This is for a primary residence only, by the way, so can't use this on an investment property or a second home. This is designed to help those homeowners that are looking to get into a home right now. And again, there is an advantage to getting in right now, even in a higher interest rate environment. And I would say even because of that higher interest rate environment. Remember, once rates come down, buyers are going to come out of the woodwork, and you're going to potentially be in multiple offer situations a lot more often out there in that type of market than you would be in this type. So let's have that conversation. My contact information is right there. Wanted to make sure you had this. Also, really just wanted to say I appreciate you checking out this information. If you feel like there's some value here, I want to have that conversation with you. If you know of anybody looking to purchase, but they keep saying I can't afford it or I don't have the down payment, this is a really, really good option for them where they are keeping the interest rate sort of kind of close to what a conventional rate would be, and also, gets you into that home as early as possible. Uh, Being a homeowner from a monetary standpoint, the numbers are astronomical. The amount of wealth that a renter has compared to a homeowner, it's like 36 times that, and a lot of it is inside the equity in the home as it builds over time. This is really, really something that can set you and your family up for the future. So, again, Troy, your loan guy with the Reichert Mortgage Team, looking forward to hearing from you. Have a blessed day. Take care.